Ladies and gentlemen, dear friends, I will introduce myself. I suppose everybody knows me. I am Marjut Falkstedt. I'm the Chief Executive of the European Investment Fund. European Investment Fund provides risk financing to small and medium-sized enterprises. This is the main activity what we are doing. And it's my great pleasure to welcome you today to our panel discussion about the financial sector and the digital transformation. Prior to the financial crisis, there were more than 8,000 banks in European Union. Since then, in the last 15 years, a lot has happened on the regulatory side, but also on the digital transformation side. And in particular, in the European Union, we today have 24 million small and medium-sized enterprises, out of which 93% are micro-enterprises. And these micro-enterprises, they have not all yet achieved what needs to be done in terms of digital transition. And our role is, of course, also not to leave anybody behind. We will discuss it today. We will discuss several points today with our visionary leaders on the stage. We would like to reflect how the technology can shape the future of the financial sector. Should we expect new business models to emerge? How can traditional banking cope with the emergence of disruptive niche players? To land all those elements to concrete ground and get us inspired for an interesting debate with our panelists, we have first Kyriacos Kakouris, the Vice President of the European Investment Bank, who will start and make a keynote speech. Vice President Kakouris has served on the EIB Board of Directors for 20 years, being the EIB's longest-serving director of the board. And before his appointment as the Vice President of the bank, he was Director of Strategy and Coordination in the Cyprus Ministry of Finance. Please join me in giving a warm welcome to Vice President Kakouris.
Good morning from me. Yes, they sent me in 2004 at the board of the EIB and they forgot me, I mean, in a way. So, dear ladies and gentlemen, dear Marjut, it is really a great pleasure for me to join this session on digitalization of the financial sector in Europe. Financial institutions are key partners for the EIB Group. We utilize the broad network and deep expertise to channel significant support primarily to SMEs and mid-caps and to smaller projects, including their green and digital transition. To give you an impression of scale of the impact created on the smaller segment of the EU economy, in 2023 last year, EIB Group provided 20 billion euros of financing to financial intermediaries, reaching out to close 400,000 SMEs, sustaining more than 5 million jobs. Worldwide, the banking sector has been going through a profound digital transformation over the past decades and at an accelerated pace in the recent years. When I was young, many years ago, my colleagues and myself would go to the local bank office to cash our monthly paycheck. Probably that's the way they selected me to introduce this topic, because I'm the only VP since that time. And I have also to say that in Cypriot civil service, I mean, I'm going to the bank. It was the most regularly used to leave the work, probably 80%, something like that. Where have you been? I was in the bank for 2 hours. Long queues, so forget it. The biggest risk at that time, when I was going, as I said, to cash my paycheck, was maybe just to get stolen, and maybe a police officer was at the bank around to regulate the scene. Today, in-bank services are a normality, and many more technological advances such as blockchain and artificial intelligence are making their inroads into the financial industry. The COVID-19 pandemic was an important catalyst for the accelerated adoption of digitalization in the financial sector, and it is expected to continue in the coming years. Banks have no option but to use modern technology to keep up the changing customer demands and the need to increase efficiency and controls. The digital transformation has changed the relationship of clients with their banks, both in terms of retail experience, where digital channels for transactions have gained prominence, and in terms of financing opportunities with the proliferation of alternative forms of financing, such as fintechs. Fintechs are a catalyst for disruptive innovation and growth in the financial ecosystem. With their agility and speed, fintechs are well equipped to accommodate many new trends in the financial sector. EIB and EIF are committed on driving innovation in the financing sector by backing innovative companies. A recent example is our 15 million in venture debt financing to a large direct, a technology-led insurance company in Greece and Cyprus that has risen to the promise of offering high quality of cheaper insurance alongside with improved customer service. It is a clear example how a fintech company revolutionized the insurance sector in Southeastern Europe. Therefore, EIB Group is keen on accelerating digital innovation, recognizing that it is an indispensable part of EU's competitiveness in an increasingly complex world. Without doubt, the digitalization of the banking sector has brought many opportunities, but also risks and challenges for the financial sector. These include the lack of investment, skilled personnel, support from the top management, and the risk of cyber attacks. Banks are now embedded in strong regulatory contexts, way beyond the policeman of my childhood. The challenges linked to the adoption of advanced technologies, therefore also extend to how regulation can stimulate, but at the same time protect from the potential negative side effects. I very much look forward to the panel discussion, for which we have brought together representatives from various perspectives to the topic. A fintech company, an investor in fintech companies, a commercial bank, a banking federation, and a regulator. Welcome you all. And I hand over to our moderator, Marjut. Thank you.
Thank you very much, Vice President Kakouris. Thank you. And let me go directly and introduce to you our very interesting panel with very diverse backgrounds. And I start with Mijs, sitting next to me. Welcome. He's serving as the Chief Executive Officer of the European Banking Federation already since 2014. He's holding many, many institutional roles, and the list is far too long to repeat, but I would start, for example, with the board of the Salzburg Global Seminar, and you're also the chairman of the European Financial Services Forum. Welcome. And then we have Mariona Vicens. Mariona Vicens is the head of innovation and digital transformation, and she has been steering the digital transformation and ambition of CaixaBank since 10 years. CaixaBank has a pioneering role and strong commitment to innovation and the use of innovative technologies to offer the best service to its customers. And maybe you will also know that CaixaBank has won an award, Euromoney Award, for being Western Europe's best digital bank. Wonderful. And then we have Pascal Bouvier. Pascal is the managing partner of a venture capital fund called Middlegame Ventures. Today, he, with his team, has invested more than 300 million euros in over 40 companies. The investment focus is in early stage startups in the fintech sphere. And if I may, Pascal, say that you are a fintech all-arounder. May I say that?
Yes, please, you may.
Thank you. And Marilyn Picaro is the Director for Innovation, Conduct and Consumers Department at the European Banking Authority, the EBA. In the EBA, she's responsible for all the thematic and policy work as regards digital finance, information and communication technology and security risks, consumer protection, the anti-money laundering and countering the financing of terrorism. Again, lot long list of responsibilities. And then I come to Ulle Lundin, who is a successful entrepreneur and the CEO of the fintech company called Fruda in Sweden, which was created back in 2015. And Fruda was created with a very clear idea to revolutionize the banking experience for businesses and to have a positive impact. Fruda's mission is to facilitate the life of small businesses, to eliminate the complexities and costs that hinder the growth of SMEs. Today, Fruda is one of the strongest growing fintech companies in Sweden. So welcome, dear panelists. Let's kickstart our discussion. And the first question will come to all of you. And if I may start with you, Wim, answering this one. As technology continues to disrupt and change the way we live, ultimately, we need to ensure that the European citizens and businesses can continue to thrive. Do traditional business models require digital disruption or digital enhancement? Do we need new business models? And if so, which ones?
The beauty of the EIB is that they know everything, and Vice President Kakouris has already answered. Because the question, do we need a new system, is no, not necessarily, because the banks from my and Mr. Kakouris' use was a very different animal from the bank that we have now. As technology evolves, as the society evolves, banks should also innovate and evolve. It leads to effects. And I'm one of these people, I am a tech guy, so I'm one of these people that once tweeted, and it was my most retweeted tweet, if it's not on my phone, I don't need it. Because if you just think the moment that my parents called each other to ask if they had paper, if they had money, analog money, because the bank would close at 5 o'clock. You can't imagine that. You can't imagine that kind of life. And for me, so banks are highly innovative and should be highly innovative, and they're helped with a great fintech ecosystem. Because what fintechs do is they take part of a value chain, they come up with a brilliant idea, they don't have the red tape, and they come with something that will really enhance the customer experience. And banks can take that on board. So that's the first layer. Then you have big techs, and that is a different question. And it's also for regulators and supervisors to ask themselves how to deal with the long value chains and the long supply chains that bring that. So that's the first layer. The next is, I heard one European commissioner once say that Europe has one great asset, that is that they are perfect in regulation. And I needed to write down the amount of regulations that we made now to just to regulate digital finance. If you look at it, and sorry, I have to read it, after PSD2, we had in the last 4 years on data sharing, the Data Act, the Data Governance Act, the DMA, and FIDA. I think still FIDA sounds a little bit like a Chihuahua dog, but okay. On cybersecurity, we have NIS2, DORA, Cyber Resilience Act. On payments, we are now working on PSD3 and the payments regulation, instant payments and cash legal tender. We have the digital euro, we have AI, we have digital identity. So all these initiatives show that Europe is indeed very good in regulation. What the worry is how these interact if we want to innovative, because if we want businesses and consumers to thrive, we need to make sure that these regulatory things interact, and we need to assimilate them, and we also need to make sure that people can move with it, because if we all go digital, we need to ask ourselves, can all people in society come in? And then lastly, we have the ECB, who also is playing with matches, and the matches there are called the digital euro.
Thank you so much. You gave a nice hook. If it's not on my mobile phone, I don't need it. Are you of the same opinion? But would you agree here?
Well, I think from a retail bank and a commercial bank perspective, I think if customers are all in line with what we just mentioned, then definitely this is the situation and the environment in which we have to compete, and we need to ensure we are successful. And this requires a lot of evolution for traditional banks. And I totally agree. I've been working in innovation for 10 years. We started thinking new competitors, new entrants would potentially be a threat. I think that now we look into this ecosystem as a source for inspiration. And the fact that they are disruptive and that they are pushing the boundaries and being very innovative in a way, trying to identify new needs, new services, is a bit of a luxury for banks because it anticipates changes in a way that it requires us also to keep an eye on what the customers are willing to adopt. And it has forced, I think, most of us to really push into new boundaries. We do not expect, or I don't think this is going to stop. We've seen this now for many, many years. We have all come up with new collaboration agreements in a way, and we see more and more of this happening. And then definitely the rhythm of evolution we need to embrace is more and more because technology is just in that speed of change. So I think we need to win the mobile. Mobile is very important. We're also thinking new opportunities in terms of new channels because of what we are seeing in artificial intelligence. Not sure if everybody is aware of newer startups even challenging the mobile as we all know the device now. And this is actually quite exciting to think about. So looking forward to it.
I think the excitement can be shared with Pascal. What about new business models, Pascal?
One caveat. I invest in fintech startups. There are two types of fintech startups. I'll be very simplistic. They're the ones that try to compete with incumbents. And let's focus because it crystallizes the mind on incumbents as banks, traditional banks, right? And then there is the other type of startups that actually create technology that will benefit either incumbents or startups or anyone else. So direct to consumer, competing directly with incumbents, and then B2B businesses that try to come up with new infrastructure. That's an important thing. As to the question, right, there is new technology that is being applied to the financial services industry and to banks. How are banks going to behave, right? Are they coming up with like incremental innovation or wholesale innovation? There's one thing, and it doesn't only apply to the banking system, to the financial services industry system. There's always one thing that incumbents do when they come against new technology, right? They think that they are going to customize and use that technology for their benefit, to be more productive, to do more with less, for increased profits, and so on and so forth. So in other words, they always think, right, that the market and the future is not going to change fundamentally. They just have market share, right? And they will apply the technology, and they will do so with the right tempo, and they'll get, better. In a digital revolution, you'll hear incumbents say, well, we are going to digitize this way or that way, and we've been spurred this way or that way, but we'll deliver this way or that way, more digital services to clients and users. I believe that that's a fundamental flaw. Why? Because there's always unintended consequences when a new technology wave, a new S-curve, right, is applied to a market structure or is applied to a business model. In this instance, the business model is that of traditional banking. Right, let me say this differently. In this instance, the business model of a traditional bank, right, is the stickiness of deposits. That's it, right? And with the stickiness of deposits, banks transforms these deposits, into lending products. This is a business model that regulators have in mind, right? That the legislator has in mind and incumbents have in mind. I will state that this business model is broken and it needs to be changed. Why? Because the applications of certain technologies in the Web 2.0 innovation waves, APIs and cloud computing, have made those deposits fundamentally not sticky or less sticky than they used to be, which means that the business model of relying on these deposits once you form them is yesterday's news. I don't know what the new model is, but to the question, do we need a new business model? The answer is yes, absolutely. I'll give you one example. The bank runs in the US with Silicon Valley Bank and other regional banks would never have happened without cloud computing and API at the speed that it did, right? And the only reason why we haven't had bank runs in Europe is because the application of regulation has been slightly different than in the US, and because the regulator is indeed applying things differently to its wards. Else, the technology allows for that to happen also in Europe, which means that those new models, right, are really a governance and like commercial brainstorming exercise, as opposed to how do we apply, you know, digital this or digital that or new technologies.
We're going to have so much fun today together, Pascal.
I know we will.
I think we will have a lot of fun all together, because now it's very interesting. So the deposit scheme type of schemes, lending, deposits that are providing then the lending capacity to the banks, that we are at risk of having that broken, that system broken. What do you think from the regulatory point of view?
Thank you, Marjut, and fellow panelists. So, first of all, EBA, European Banking Authority, based in Paris now, it has variety of roles. So, policy development, opinions, monitoring innovation, overall market situation, also the risks in our countries. I would say that. Based on our researches, obviously there are several risks related to the innovation, but innovation is something that we all want to have. We don't want to live in the past. We can't imagine that economies would develop only based on the historical business models and then business operations. Why regulations are good to have? So it sets the at least minimum requirements for the playground. So that helps the competition. We were mentioning PSD2 and now we're moving towards PSD3, open finance. So to boost the competition, to open up opportunities for the citizens, there the regulatory requirements are absolutely needed. Otherwise, it would be unequal play field, because some of the more traditional banks, they are under the supervisory obligation. They have requirements, while the newcomers or more innovative approaches would have very limited or zero regulations. So let me summarize maybe a few points that would be centric of today's discussion. That is information. Awareness that any citizen who would like to use the services, products, or new solutions would have an adequate understanding what are those. And that's understandable, that's translated to the citizen level, average citizen level. So financial literacy, starting already from the preschool, continuing in the universities and later. And this awareness and education that also comes into the play of supervisor roles. Also, our supervisors needs to be up to date and educated on the new trends, which we are doing already now, running certain programs. But then with all those variety of new services, how we ensure that there is no discrimination, even if it's not intentional discrimination, using artificial intelligence, for example. So some customers may be completely excluded having access to the services. And that would lead eventually undesired, unfair situation in the market. And lastly, we discuss also the security aspects. While now being all digital or moving towards having digital life, we need to really be aware of cyber risks. So, and what we can do about that. I stop here. Thank you.
Thank you very much, Marilyn. Now, Ulla, you created something, a fintech, 9 years ago. Are you already, old? Are there so many other things happening? How do you feel?
Yeah, I certainly feel old, but talking about sort of the the digital transformation that we brushed upon, I think from a user perspective, it's not so much a trend as already a fact. It has already happened, and everybody expects a fully digital user experience. So what we're talking about here is how is the rest of society, like traditional banks, fintechs, and government bodies and so on, going to adapt to that. And there was one thing that Pascal mentioned earlier, which raised my curiosity about sort of the fundamentally flawed system related to the stickiness of deposits. I think from a technological standpoint, I'm not sure that deposits are becoming less sticky. I think the funds are increasingly liquid due to the development of technical advancements, and that creates a sense of security in the population, which was not the case, I think, many years ago. And looking ahead, I think the regulatory framework for deposits functions in a very solid way in terms of keeping them sticky with the banks. I think development going ahead, I think things are going to be developing in a rapid pace. And I think that development is to a large extent going to evolve around the sort of what you call it, sort of you make a system more intertwined. The current players in the system, the traditional banks, the regulatory bodies, and everyone else is going to work a lot more closely together in more collaborative manner compared to what we've seen in the past, where all the sort of banks were seen as competitors and the fintechs are seen as disruptive players. Me being arguably one of those sort of representatives, being a disruptive player. But I think going forward, we're going to be seeing a lot more collaborations in all aspects. And I think that is going to be to the benefit of SMEs and consumers alike, including the current players, assuming that they're willing to adapt.
Thank you very much, Ulla. We have heard now many buzzwords like sticky deposits and financial literacy, potentially also digital literacy, whether the business model is broken and so on. Now you both, Mariona and Ulla, you both refer to collaboration. But Mariona, from a large bank's perspective, how do you see the role of fintech companies? Is it indeed collaboration? Is it part of your acquisition strategy? Or in your bank, for example, big bank like you, or others also here in the room, is it more question of self-development, developing self-systems what you need? And is it really so that it's not competition but collaboration?
I think, as Pascal mentioned, there's a clear group of fintech that are very much focusing on developing technology, very much ahead even of big techs in many spaces. And in that scenario, definitely there's a need for collaboration. We've seen this in many recent technologies, like the companies at the forefront of certain blockchain or security, especially are pretty much in the startup space. And in this environment, banks have had to learn how to collaborate with these companies, which it's a journey itself because of all the requirements many times we have when having to collaborate and to build a relationship with third parties because of different regulatory constraints or even internal policies. So there's definitely a collaboration a space out there with our technology teams. We leverage more and more technologies from smaller companies beyond traditional tech partners. And I think we still have two sets of players in all the ecosystem. We have those that have solutions direct to consumer. More and more also, especially depending on how the financial markets behave, they sometimes consider banks as a distributor of fintech products. It's not strange to have some examples of services that may have been developed by fintechs with an objective of direct to consumer, but in the end they realize that maybe they can partner with a big bank with already established relationships and broad customer base, and especially then in the world of open banking and APIs, this makes a lot of sense, and this is happening also more and more. And then the third big area of collaboration is what's going on with big techs. We had a very kind of 10 years ago, it was a very different environment. We didn't have our tech partners or our IT partners, considering even Google's, Amazon's, and even Microsoft was a very different company. I think now this is also changing a lot. And the level of conversation we have, especially with companies like Google and Amazon, when you have a dominant position in a market, is really, really very different, because they also want to be your tech provider. And then this provides a new set of opportunities for banks when dealing with this situation, which is new. We have to deal, we have to learn, not that everything is perfect, but I think in all three fronts, definitely there's a more collaborative space and willingness to collaborate than 5-10 years ago. That's my point of view.
I suppose Ulle agrees, because you were also referring to the collaboration. But Pascal, would you agree?
Yeah, absolutely. I think that at the very beginning of the fintech revolution, that first wave, right, that came from the Silicon Valley, frankly, and a little bit from the UK. The ethos was very much, we don't need banks. We're Silicon Valley technologists, and we are going to eradicate banks very quickly. That didn't happen. That failed miserably. And out of the necessity of surviving, right, you had all of a sudden people that were attacking banks going, banks are our best friends. We're going to pivot, and we're going to sell our technology to them. So just because of that, right, it's something that has happened, and it's something that is continuing to happen. There's a second point. As you go down what I would call the business/technology stack of any industry, right? You start with the front end, as close as possible to the user or the consumer, and you go to the middle office, the middleware, and then the back office, the back end, right? The further down you go, the more complex, right? The processes, the technologies, the software, the hardware is, right? And usually when there's something that is way, way more complex than simple, you have to have collaboration with various parties. Consultants, technologists, upstart startups, an incumbent, big tech, and so on and so forth, because the problems are so intricate and so complex, I repeat myself, that you have to have collaboration. You cannot have one entity that solves that type of problem.
Ulle, anything to add?
No, I completely agree. I think, Marjut, you mentioned earlier that there were 5,000 banks in the European Union. I don't think we can expect all those 5,000 banks to fully adapt, develop everything in-house and do everything themselves. So it's very much the truth that we need to collaborate together in order to make this economy work and provide great products for the customers.
Thank you so much. Now I think we have quite a diverse picture in front of us in terms of digital banking, mobile banking, neo-banking, all these type of different fintechs that are out there. Now, from the regulatory point of view, again, Marilyn, how can regulation stifle innovation? Is it really so? Can regulators help fintech to blossom? Innovation to blossom?
I'm a great believer that we can. So sometimes I get questions from audience, but you regulators, you are too old to understand what is innovation. So I may say that the EBA, the team is very energetic, very knowledgeable, and many of us also have a background from the industry, so various roles. So, but that links back to this collaboration. So, and as we all know, the proverb that if you want to go fast, go alone. If you want to go far, then you should go together. And we are all together also in the space of innovation. So, industry sessions, public hearings, everything that goes along with policy development, that is actually working closely together. So we need to share the understanding, concerns, opportunities, so that all of the players have a good understanding what is the way forward also from the regulatory perspective. And here, and it's not only that the industry different firms needs to be connected. Also, supervisory authority authorities are connected and working together. Here, the good examples are now with the implementation of DORA, Digital Operation Resilience Act regulation, and then MiCAR on the crypto area, where EBA, ESMA, focusing on the securities markets, and the EIOPA on the pensions area, we are working closely together as one team. So, because eventually all the players in the financial industry, they are connected, they are under the same requirements, so it means also that we need to be connected.
Being well connected also needs that we need secure means. So what are regulators thinking about boosting innovation, however keeping it on a secure ground?
So if I continue here, that many large regulatory initiatives that you now come alive, so like Artificial Intelligence Act, developments on the crypto space, so that has started based on the research and studies supervisory authorities have done several years ago. So how the policy development process works is that initially there is innovation monitoring, understanding what needs to be considered more on the regulatory space. We do the studies, we provide the summaries, conclusions, recommendations to the Commission, and depends on the significance of the topic. Not all topics are booming or has potential for the future, but those who are, like artificial intelligence, the directives are being developed. So, and I would say that it's a deep connection between the innovation, the work that we do in the regulatory space, and what is eventually the outcome exposure to the market.
Thank you very much, Marilyn. Now, Wim, you represent how many thousands of institutions?
3,500.
2,500.
35.
Now, would you agree, innovation and security, can it really be regulated hand in hand?
Quickly go, because actually the panel is coming very nicely together. If I may start with Pascal, I have to react to Pascal. Indeed, it is a tendency of incumbents to sit tight and just say we patch the extra new service to it. But if you have a Kodak moment, which digitalization arguably is, you'd better rethink your whole model. Now, for banks, the problem, of course, is that they also have a social function, and that if you close all offices and only go by phone, which I would prefer for, is that you leave large parts of society outside of access to the bank system. So that is always a small handicap. Having said that, Pascal is absolutely right in saying that the banks should not hide behind a market power and regulation. And there you saw a complete change, because you saw a number of regulatory initiatives indeed that forced the market open. PSD2 was one of them, but you saw also new realism with fintechs. Fintechs didn't say anymore, in 2 years we will rule this place because nobody needs banks again. But the fintechs realized that with brilliant ideas and agility, they also needed actually clients, money and scale. So collaboration was the way to go, and you see that we are there now. Now, what is the challenge here is two things. First, on the whole thing. You see that one of the fundamental changes, arguably, is that banks do not have big IBM mainframe computer centers anymore, but they've moved to the clouds. That means that you have the entrance of big cloud providers, of big tech, deeply in the banking sector, and that also has a clear effect on supervision. Because in the past, the supervisor could just go to the computer center, plug in your laptop and supervise. But here, you now need to go to Google Cloud of Amazon Web Services. And you cannot get away with just calling that outsourcing, because it is a complete paradigm shift on how we deliver services. And this is something that we need to look at. The other thing is stickiness of deposits. Stickiness of deposits has suddenly become, after March 2023, a very popular thing among supervisors, because they realized that indeed the speed with which money can change, and we've seen it with Silicon Valley Bank, is mind-blowing. But if you look at Europe, which has arguably quite a resilient banking system, also through good supervision and regulation, you saw Deutsche Bank come under pressure, and you saw that the high-level wealth management was immediately moving, whereas the normal savings accounts were sticky. So this, for me, is again something that supervisors will have to keep in mind. Especially, I say to the ECB, if you start offering a 3,000 euro free digital euro wallet, because then the stickiness will certainly change. And now to cyber. Again, I thought that, say, once some brilliant scientist did ask in a questionnaire to criminals, why do you rob banks? And the answer was, because that's where the money is. That is an advantage and a disadvantage, because banks always knew they were going to be robbed. So in the design of the technological systems, banks were always very advanced in cyber robbing, cyber attacks, etc. But now, again, that means also that our supervisors need to adapt and not sit in their tower and supervise, but cooperate. And I'm very happy to say that a single supervisor, the ECB, is closely cooperating. Originally, they started with, you need to report in 2 hours through our own spreadsheet, which is pretty dumb if the attack is still going on, actually. But now there's active exchange, because if you just imagine that we have longer supply chains, and if you think, for instance, about the Aon case, where you get ransomware attacks on core parts of the bank system, you realize that this is close cooperation between all actors, including the regulators and the supervisors. So for me, DORA is an example of the importance that we have on resilience. So in short, this needs deep, intense public-private partnerships. It needs good regulation and good supervisors.
Thank you so much, Wim. I see Pascal thinking, and I suppose you would like to respond.
Yeah, I used the word sticky, and I got 2 pushbacks. So I won't use the word sticky anymore. I'll use the word, the nature of the behavior of deposits has changed and will continue to change, and that will accelerate. And that means, one, that indeed deposits are more liquid. There's a certain fluidity to how deposits move from one point to another, one account to another, one entity to another. And there's also a second point, which is as important as the first one. In the United States, 50% of new deposit formation is happening outside of the banking system with non-banks, right? Mutual funds, some insurance companies, a lot of like smaller businesses, fintech startups that have banks behind them, but like, you know, the link of the deposit and the deposit formation does not happen with the bank. In the United States, 70% of payment transactions happen outside of banks. That's staggering. In China, those percentages are higher. I don't know what they are in the European Union. I suspect that it's less for new deposit formation, probably 25, 30%, but it's growing, right? And for payments, it's pretty much the same. So there are trends that have been facilitated by technology that have a direct impact on the business model of traditional banks. That's a fact. It shouldn't be controversial, right? And it means that both regulators as well as, you know, the executive boardrooms of banks need to think really long and hard of what those new business models are. Do we divorce distribution from manufacturing? Do we drop the universal banking system and focus on specialist banks? I think that there are like all kinds of different answers, but you know, they have to be answers.
Thank you so much. You are making the picture of quite a huge transformation within which we are. But my next question to you, Pascal, would be whether we have everything under control when we talk about tokenization, artificial intelligence, steered investment strategies, cryptocurrencies, and so on. And in particular, how will regulation keep pace with financial market dynamics that are increasingly driven by computing power that surpasses human intelligence and imagination? And in addition, in a scenario where financial sector regulation coping with technology and digitalization will itself depend on technology beyond human control?
I don't agree with the premise of the question. I don't think that there's going to be something that is outside of human control. If I reduce the aperture of the question and focus only on artificial intelligence, right? The application of that artificial intelligence lead to a system where a regulator, seems to be out of control? I mean, first of all, it's neither intelligent nor artificial. It's man-made and it's pretty much dumb. But dumb, man-made, DM doesn't sell as much as artificial intelligence, AI, right? It's man-made. There are limits for the different types of artificial intelligence, whether it's like yesterday's, which is machine learning and Bayesian techniques and advanced data analytics. And it's man-made now with LLMs, either applied to text or to pictures or to video. So, and on top of that, it's not to the level, and will never be to the level of, godlike quality where we absolutely lose control. So one, I don't believe in that. Two, we have, in this new S-curve that we are under, we have two fundamental technologies. We have AI, and we have, I'll use the word cryptography, right? Which applies to obviously the crypto space and digital asset space, but cryptography specifically. AI has to do with abundance. You can do a lot, and it creates a lot of data, and it's super abundant, and it will be readily available to everyone. Abundance. Cryptography is about scarcity, right? There are cryptographic keys, there are public keys, private keys, and so on and so forth to pinpoint exactly the ownership of something or the state of something. Scarcity. Abundance, right, is going to help regulators. Because at the touch of a button, they will be able to get to a definitive signal. The only issue is, with every technology, you have unintended consequences, right? I talked about the unintended consequence of APIs and cloud computing and the fact that banking business models are broken as we speak. The unintended consequence of AI is you get fakes, you get, bad actors, malevolent actors, and you have to counter that with new technologies to make sure that the fakes are taken out of the system. But fundamentally, AI will simplify a regulator's job, right? Twice over. It'll simplify it because in the first instance, it simplifies its wards, data analytics, and data processes. And then second, it simplifies the regulator when they look at like simplified processes and data clarified by AI with their own AI technology tools. So I think it's erroneous to think that there's a moment where we'll be out of control, and we should think about actually how regulators will have their work simplified, probably 10 or 20-fold.
Thank you so much, Pascal. Mariona, would you agree that artificial intelligence, you have everything is open, ChatGPT, GenGPT, Gen AI, all these things, that they will be open, can be used in an uncontrolled manner? What do you think?
I agree a lot with Pascal's views that this uncontrolled and scenario is not very likely, at least from our point of view. Definitely, we differentiate two waves of artificial intelligence development. What we saw in the first wave was the massive adoption of machine learning in many areas in financial system and in banks, especially with a lot of impact in the risk areas and also in commercial models, how we calculate propensity to buy, how we calculate the next best action with a customer. All this happened around or starting 2014 in our case and has continued until these days. In that first phase, we all tried about natural language models and definitely what we see now with LLMs is totally a new revolution on what we can envision. And this is where it even can go beyond the mobile phone that we all love, because this can even revolutionize many things that now we give for granted in terms of technology, and we do not even think that it can be a new challenge, again, for the device space and creating really new channels, because it's funny that we all assume that mobile is our preferred channel, and we kind of forgive that it's quite a recent channel in the form we use all of all of us use mobile now, and we really see that this new ChatGPT wave can really innovate business models in a way that it's difficult now to envision. It reminds me a little bit previous waves of innovation. We are all kind of looking how ChatGPT makes some current process more efficient. This is how we all start in any transformative wave. Then we realize, okay, now actually we kind of need to change also the process. And then the third kind of thinking is, wow, this may even create new businesses, no? And we see a new wave of startups, even when they present themselves, they even pretend to challenge Apple, which is kind of funny because this was a new interesting scenario, and definitely I mentioned before looking forward to it because all these big techs also are becoming kind of incumbents in their own space. So it's kind of very interesting phase of innovation with all we see in artificial intelligence. Yeah, definitely.
This gives us a lot of comfort, so thanks a lot, Pascal and Mariona. This brings me to Wim. And Wim, using technology more widely and involving third parties more heavily, for example, through outsourcing, for example, or cloud computing, that makes banks dependent on the availability of IT services and potentially then also more vulnerable to cyber risks. Potentially, this is the question. Now, how do you think that these risks can be consistently and proportionately addressed across European jurisdictions without hampering the financial industry's ability to apply innovative services?
I gave away my answer already a little bit because I'm a big believer in cloud computing. Actually, I believe that cloud computing has made banking a lot safer than the mainframes which we had from the 1970s. I think that the power of cloud is not only innovation and the availability of data, but also the patching. Because if you look at cyber attacks, they usually come in because there is some legacy software somewhere running around, and that is the entry point. So let's go that the innovation makes banking more secure. Having said that, the most creative people on this planet are unfortunately criminals. So we need to be ahead of them. And first, so if you first look at the banks by itself, the banks themselves need to cooperate. And I'm a big believer in these close shop of trusted people who exchange methods of operandi of the different cyber criminals. We need to be aware. I've talked about ransomware as a service, but that's the bank's own responsibility. That's the first level. Then there is the regulatory and supervisory responsibility. And at the regulation side, I said that DORA, a specific resilience act for the financial sector, actually makes a good sense, and also the cooperation between the different supervisors. But then also the supervisors need to cooperate with the banks themselves, because I argue that banks with large teams of cyber specialists are at the front, and they need to be able to inform the supervisors who are one step back, and supervisors themselves need to realize that they themselves are a prime target for a cyber attack. And lastly, it is the public-private cooperation, both at the national level, where things are sometimes well organized in national cybersecurity committees and escalation committees, but that also needs European. And for that, I want to mention Europol, EC3, and the campaigns that they do, the awareness campaigns, because the weakest point is always the end user. We see the spoofing via the mobile phone. We see other affairs, so awareness campaigns through Europol and close cooperation and using the specialist in Europol EC3. So many things to do, but the key is awareness and cooperation.
Thank you so much. Marilyn, what would be your view on European Union, different legislations and different systems and their cybersecurity?
Yes, thank you. I largely agree with him. We see financial industries reporting two-digit growth of cyber incidents year by year. So only Previous year, there was more than 61,000 ICT incidents, which is the largest area that contributes to the op-risk area. And obviously that requires attention. With DORA, most of you, I hope you are familiar with that. What we are doing is, with other supervisors, is really connecting third parties who have a role to provide critical services to the financial sector entities with the supervisors. So we are creating the holistic framework, also the response, the emergency response, the crisis protocol. So because there is never going to be a time when we could say that we are fully preventing cyber incidents. The question is only how we react. Do we have sufficient knowledge? Is this knowledge, tools, solutions are shared? And how this information then would move as quickly as possible between the parties. I mean, businesses are, there are no boundaries. I mean, we're not based on one country only. It is not even across the Europe, it's across the world where those incidents could be evaluated. So.
Thanks a lot, Marilyn. Wim, you would like to add?
One short addition, and that is also to keep in your thoughts. I'm working on a project now because one thing that scares us as banks, is if you look at ransomware, and let me concentrate on ransomware, an attack on a payment system is inconvenient, and disruptive, but it is well taken care of. One thing that would scare us is a ransomware attack on a critical financial part, let's say the treasury of a bank. And we all know banks go bankrupt not through lack of capital, but they go bankrupt through lack of liquidity. And if we look at ICBC in New York, that was a ransomware attack on the treasury or on the capital markets part, the capital markets clearing part. So what scares us is that if you do that, even if you pay immediately, if you say, oh, ransomware, where can I pay? And you pay immediately, it will take you around 10 to 12 days to become operational again. But your liquidity in your bank lasts for 2 days in your treasury. So we're working with large banks at the firm, but the idea is to roll it out broader on a project to see if we can have some kind of safe haven or some kind of help to make sure that a bank that if it, and let's hope it never happens, but if it is hit by a ransomware attack in, let's say, their capital markets unit or their clearing unit or their treasury, that there is some kind of safety net by the other banks. And we do this working, of course, closely with the ECB, but that I wanted to add.
Thank you very much. You know, for us as a financial institution, training of employees, whether it's now on compliance issues, on sanctions, on NCJ policies, but in particular on cybersecurity is very, very important. And I suppose there's not enough, even though the staff will certainly say there's far too much training, in particular mandatory one. Now, Ulle, how do you deal with awareness raising, training? Do you feel that you have a network that supports you in case something happens?
I think we do. I mean, Froda chose a few years back to become regulator ourselves, so we applied to the Swedish FSA to become a credit institution, and that, in a way, provides a framework that you need to follow to adapt your business and to put yourself in a position to handle those challenges as they may arise. Obviously, not all fintechs have done that, but from our point of view, I think there is a strong support.
It's good to hear, and Ulle, that you took the floor. I have a follow-on question for you to continue on the innovation path. We can concur, certainly all, here that data is the alma mater of innovation. Data is the basis for developing artificial intelligence application, which can be applied in so many different sectors. But how can AI in the financial sector and more broadly, a data-driven economy influence the doing business and opportunities for SMEs? And what are the barriers and challenges? smaller businesses face when they consider AI adoption?
Those are big questions, obviously. I think looking at the impact of big data and AI, and perhaps more so traditional AI has for the past decades have a pivotal role for innovation across all sectors in the world, and that includes the financial sector. I think data-driven businesses, the value of those businesses are increasing in the amounts of trillions annually. So it's huge business. And now with sort of LLM and generative AI, that's going to explode even further. But looking at sort of the financial sector from the SME vantage point, going back to that part of the question, I think we are at a time where I think there are especially 3 areas where we see the sort of greatest use or the great immediate use. To the benefit of SMEs for sure. The first one I would say would be customer-centric offering. Suddenly you have AI which allows to individualization and that from one point of view increases the relevance for the customers of the offers, increases the accuracy of the offers and obviously the speed of the offers. The second area where I see great development is risk mitigation. And that goes to credit risk, fraud risk, or AML risk, or all those type of risks. And it increases basically the back-end's work in identifying those risk factors and mitigating them. And the third area is automation. And that we see not only in financial sector, but like I said, all sectors. And by way of example, it has been shown that automation and AI has been able to reduce bank fraud in the range of 50%, or false positives in the range of 50%. So we see there huge gains in reduction of operational costs in the financial sector. And what is most interesting about this from the SME vantage point is that these customers suddenly becomes more profitable to traditional banks or old players, if you will, than they were before. So suddenly SMEs become interesting for the financial sector, which is, I think, has been the main problem going back in the past decades. They have not been the focal point. And suddenly you realize that, okay, well, through AI, through big data, through collaboration with other players, fintechs and the likes, suddenly we can serve this severely underserved segment in a profitable way. And as soon as you can show black numbers and good, healthy product economics for a segment, suddenly innovation takes a big jump.
Which is great news, considering that indeed we have 24 million SMEs in European Union who all need finance and access to affordable finance, in fact. Pascal, how would you react to a question on data-driven economy and opportunities for SMEs? Do you see many more opportunities? Do you have much more demand that then you can basically address with the venture capital and with the funds that you have?
I think that what I've heard encapsulates most of what we see. We tend to find startups that are extremely specialized and have pinpoint solutions on one aspect of the data conundrum or the other, right? Whether it's how to process compliance, whether it is how to process risk. So I don't think that I have anything to add there. But when you think about the world of data, right, you think of either a data point or a data set, right? And a data set is more valuable than a data point, and that data point is extremely heterogeneous, right? Let alone the data set. So the data point can be a alphanumerical value, a numerical value. It can be pertaining to an asset or a transaction, or to an identity. And where we see the most interest and the most opportunity is on data that is appended to identities, right? I'll go at the planet level. So we have like shy of 8 billion individuals, cohabiting on this earth with us. I don't know how many corporations there are in the world. 350 or 400, a million or such. I think that there are many funds, 500,000 the world over. There's 1.5 quadrillion of assets, any type of assets. Quadrillion, that's a big number. Just for those who are wondering. And there's 4.5 trillion of transactions per year, any type of transactions, right? All of these are, data points. And to resolve the identity behind those data points, these transactions, these people, these corporations, right, is fundamental, a fundamental proposition for the financial services industry or for banks. And so that's really what we focus on, because it hasn't been resolved, right? We're in a digital world where the first waves of the internet and the technologies around the internet, right, basically facilitated the exchange of information and then the exchange of goods with the e-commerce. But we haven't resolved identity. And before we resolve identity, I think that we'll fall short from fully utilizing any type of data that is at our fingertips.
This is really exciting. Thanks a lot. Now, in the beginning of our discussion, we touched upon financial literacy and digital literacy. And I would like now to come back to the social dimension of financial sector. And in particular, the question, how do we ensure that we don't leave anybody behind? Because not everybody has access and can finance a mobile phone, smartphone, nor even having a computer might be difficult. So how do we ensure that? And then I would like you all to comment on the statement I'm making now. Fintech is the biggest driver of financial and digital literacy among vulnerable customer segments. Could you please comment on that? Wim, would you start?
I come from a family of teachers. I am absolutely passionate about this. Let me be very clear about this. I feel that it is a duty of banks and society to deliver tools for financial literacy. Not only, but one of them. And they need to work with government and the education system. They need to work with schools. They need to work, so that is extremely important. It's a duty of society as money becomes more virtual and it becomes more digitalized. For this, I was one of the founders in the Netherlands of the MoneyWise platform, which is a public-private partnership with the central bank, with the Financial Markets Authority, Ministry of Finance, and then all parts of the industry. And in Europe, since 2014, I've organized the European Money Week in 33 countries. For 16-year-olds, we also have European Money Quiz, which is played by 1 million kids throughout the European Union. And that is so important because it comes to your second question as well. So it starts with the basics. Make sure that you have the tools. Let's start with kids, the tools to the teachers. You never tell a teacher how to teach, but that you deliver the tools with which teachers can teach. That's one. That's the young ones. Then I can tell you, if you try to go into calculus and math, and you try to change the school books, I found out that it's a 10-year cycle. So it will take some time to make the calculus on apples and pears into a more realistic scenario. Nevertheless, we should do that. Then there is awareness. Awareness, again, through authorities, on money mules, because they abuse use. And now I come to the elderly. For the past 3 years, the Money Week theme was always financial literacy with digital skills, because without digital skills you can't help. So you need to make sure that you give access. You also need to access the elderly. The problem is children can be reached through the educational system. With the elderly, it's sometimes more difficult to reach them. But we need to be creative. And then coming finally to your wonderfully provocative question, fintech is a big help. It depends on what you call fintech. If you talk about financial technology, I absolutely agree. Because simple tools to manage your money and to test, and one of my favorite ones in the past was, there was a pocket money app that literally saw your pocket money as a kind of Donald Duck pile of money. And whenever you bought something, you saw something go in flames. So it visualized very clearly what you could not feel in your wallet again. So these are brilliant solutions. If it's about fintechs, the companies, then they are just part of the ecosystem. And one thing to say is, this European Commission, this Commissioner, McGuinness, has done fantastic work, because you can look at it from the Commission side in two ways. Yes, it's the member states' role, but you can also use the power of the European institutions to bring people together. And this Commissioner has done that, and also the European Banking Authority has done fantastic work on financial literacy.
Thank you so much. I fully agree. Fantastic work has been done. Now, from Mariona, from your point of view, how do you see the social role of
I think the
CaixaBank?
social role of CaixaBank has a savings bank origin. I think this is part of our mission. We have a strong programs of collaboration with the foundation of Caixa, who owns a significant stake at the bank, and also with the government. I think we mentioned this before, but in many societies we are far from thinking that digital is just a channel that provides the service that certain segments require. And in particular, elderly people and senior people. Also, when you have to deal with more complex situations, like, for example, during COVID situation, I think we realize the value of more human type of branch network as well, in dealing with a very exceptional situation in which we were definitely not 100% ready to even imagine what we had to cope with. So I think it's difficult for me to subscribe the provocative sentence at this point. Regarding younger segments and subscribing what just been mentioned about education, we were also very concerned at some point with the crypto space and the behavior we were seeing from our younger customers, and even some retail customers that definitely it was difficult to see that they could diversify their portfolio in this type of investment. So we even think, or I even think, that there are some risks in certain situations. Definitely education helps, but I think also regulation and well, governments and authorities have a very important role here to ensure that society is in good health.
Thank you, Mariona. Wim, did you want to add something?
I was just smiling because I thought, yes, but what's wrong? These nice people on TikTok advised me to get into crypto. But that is exactly what happens.
Pascal, your comments to social responsibilities.
Yeah, that's speechless. I'm still processing the question. I'm going to answer it completely differently. I think that each generation, right, acts very differently than the previous one or the next one. And because each generation is formatted by, foundational years when they are young, right? Whichever these foundational events in these foundational years happen, and how they, the people in that cohort, in that generation, digest them. Those parents, grandparents, great-grandparents that went through the Great Repression, the Dust Bowl in the US, what happened in Europe, those that went through the Spanish flu just after the First World War, and so on and so forth, or those kids, right, that were 5, 6, 8, 10 years old when the Twin Towers were hit in the US, right, are going to grow up or have grown up with very different approaches to literacy, how they want to educate themselves or not, very different approaches to money, how they spend money or not, and to risk, how they take a risk or not, right? So again, each generation has a band of more or less acceptable behaviors, right? The legislator can create boundaries within those bands, because the legislator basically reacts to those people that vote him or her in, right? But can the legislator change fundamentally those types of behaviors? Can you provide financial literacy to someone who absolutely doesn't care? Can you provide the type of like savings and investment acumen for someone to whom gaming is a foundational part of the years that they've grown in, right? And all of a sudden, gaming permeates every action that they take, whether they're on TikTok or other social media, or whether they invest through an app called Robinhood, right, in stocks, which is very, very different than how I or my grandfather or my great-grandfather invested in. So I think it's a very tricky thing. What I can say definitively is, if we don't discuss financial literacy, which I think is it's a fool's errand, financial access, and I will hesitate to use the word financial inclusion in our developed countries, financial access, I think, is important, right? The legislator has to make sure that like every socioeconomic category has some type of access, a bare minimum access, a definition of what bare minimum, to all types of financial services. And there, again, I don't think it's a technology aspect. It's basically the legislator making sure that people are not disenfranchised because of technology advances.
Thank you so much, Pascal. Now I'm seeing that the time is running out, and I have one final question, and I would like to start with Ulla, with you. And the point is that the world around us is changing fast, and the technology is changing even faster. It's moving really fast. What would be your advice to our audience here? How to keep you up to date?
In one respect, I'd say I'm kind of lazy, because the approach I'm taking is that I'm working with extremely talented younger people around me who constantly poke me about things to look out for. So I get a lot of sort of quality feedback about what should I look into, what trends should I look after. So I take a sort of lazy person's approach to it.
So we have to surround us with young talented people. Marilyn, what would you advise us to do?
I would just say that let us not create expectations that we can catch up or be fully informed about everything that is happening around us. And not everything is worth to pursue or to follow. So pick your games and focus on the areas, either in your professional or personal life, where you can focus and you can do it well. So, keep it simple.
Thank you so much. We keep it simple and focused. Pascal, what would be your advice? I
don't know if I'm an expert on telling you how you should lead your lives. So, definitely on fintech for sure. The one thing that I continuously do, and I'm not going to say please do it. I'm just going to say, as a suggestion, I always try to stay outside of my comfort zone. Right, a little discomfort at all times. Apply to anything. What I read, what I discuss, the types of people that I meet, the types of events that I go to, anything. As long as there's a little bit of discomfort, then I'm somewhat happy with it. Comfort seems to be like, you drive in the middle of the street, but that's boring.
Thanks a lot, Pascal. Mariona.
I would say active listening, especially if you have this ecosystem of new entrants or disruptors around you. I think this is really powerful. A little bit like leveraging their knowledge and their thinking, and I think this is really helpful and efficient in a way.
Thanks a lot. And Wim?
I like tech. My head of cyber calls me the biggest single risk for cybersecurity, because everything that is IoT in my house is IoT, so true. And I absolutely hate complacency. The idea that yesterday will stay if you defend yourself either by just buying yourself out of it or asking the regulators or to defend yourself is a huge problem. At the same time, it's incredible, and actually we're very clear in Caixa that we use the word mobile too much, but we need to look beyond mobile already. So follow the new trends. Young people are incredibly helpful to listen to. But you also can have corporate herd behavior. Well, I was listening, I was thinking about the bank that I used to work for had an office on MySpace for 2 million euros at the time. I don't think that any single client in the whole world ever visited that office on MySpace, and I wonder if it's still there. But never be complacent and look for tomorrow.
Thank you so much. Thanks to the panelists. I had a lot of fun. I hope you too, and I hope you too in the audience. Thank you so much for joining us today. I think we need to applaud. But before you leave this room, just one short announcement. There will be a video by the President of the European Parliament, and you can stay seated here in the room. It will be broadcasted in a couple of minutes on the screen. Thank you so much, Wim, Mariona, Pascal, Marilyn. Have a good trip back home. And Ulle, thanks a lot.
Thank you. Thank you.